Hello, warriors. I hope you're all doing good. I know exams are over. Yes, you have done a great job, is what I would say. It has been a tough times to complete the exams. Trust me, half the journey gets completed the moment you sit for the exam premises. And so, great job. But I did promise most of you people, after the exams do get over, you will be given the video of the paper analysis. Now, there's a funny story. When I was preparing for the paper analysis, one of the Telegram channels just reached out to me and just told me that here's the MCQ paper for direct access because the paper got leaked. I mean, hence the poster and everything. But I was surprised because that generally does not happen. Anyway, taking this up, I spoke to one of the students who wrote the paper, and surprisingly, that was actually the MCQ paper which got released. Now, yeah, ICA would definitely get to know this sooner or later, and so the videos would be taken out faster, which is why before even releasing the final paper analysis of the theory descriptive part, I took this opportunity to write and prepare for the MCQ paper. So I'm quickly posting out a video for the MCQs, what were discussed for paper number 4A of November 23 CA into direct access. And yes, within a day or two, you should also get the balanced paper analysis for the descriptive part as well. Before I start this paper, a word of caution for every one of my friends who have done this November 23 paper. Please don't look at this video with an intention to analyze yourself and criticize yourself as to how you have done the paper. Trust me, what you have done is done. You cannot change that fact right now. This video is solely for two reasons. One is to give you an hindsight as to how you have performed. If you have done great, then excellent, be proud of it. If you have not done great, no worries. If you feel like you can analyze yourself and figure out that you may have not done a great job in this November 23, the video is just to let you know that the time for May 24 is a little shorter. If you feel like you need to start preparations, now is the right time to do it. Yes, especially for my paper because the paper changes substantially and we have a good amount of amendments this time in May 24. So this is just to tell you how the paper looked like, what is my impression of the paper, and to discuss a few answers with you so that you can analyze as to what your interpretations were and have you done it logically or not. The next biggest reason why I have done this is because this is more for the May 24 people, right? What I'm going to do is, even though this paper is prepared from November 23 analysis, I will also replicate these answers for May 24 and tell you whether if there any change in May 24 compared to this question. If not, then you can just follow the same question. This would help you in your preparation phase once you've completed your subject, right? You can use these videos to do a preparation of your May 24 paper as well, with the changes which I obviously tell you about, right? So this is more centric and focused to my May 24 friends. November 23 friends, please to look at it, but with a positive mindset is what my request would be. Now, this paper is purely direct access. It's not indirect access. I've scrapped away the indirect tax part. If you feel like you want the indirect tax part also, feel free to reach out to me and I can share you the PDF copy. I don't have the answers to it, unfortunately. In the income taxes part, I have actually put out the answers which you notice on the page as well. I will share you the answers as well so that you can also think about it. You can keep it as a soft copy preference for your future. And like I said, May 24 can use it as a reference point. In this paper, I'm not going to sit and solve most of the things because obviously it's MCQ paper. I want to give you the impression that every question should take you not minimum, in fact, maximum, only 1 minute and not more than that, so that you can save some time for descriptives. So we're going to do it in that same exact pace. I have already written most of the answers in my PDF copy as well. So I'll be sharing you it along with the answer so that you can read it from your side as well. Yes, without wasting any more efforts, let's quickly get into it, shall we? Perfect. Let's look at the question number 1. I think the one thing which I wanted to maybe before I start the paper itself is that I felt MCQs were this time a little easier, right? There were certain challenges, some small areas which they had tested you, but beyond that, the paper was straightforward and damn easy. I could not see any question which is coming out of the syllabus, anything which is beyond the scope of the book. So this is one thing which I felt. The paper was pretty average to my understanding. There were some small intricacies which were tested. I think we have already done those intricacies in the marathons and all which we did. So if you have read it from me, you would have been able to solve this paper. But yes, they did not keep it very straightforward also. They did not keep it very complex also. I feel the paper was simple, straightforward, was a average kind of paper with some small intricacies. That's what we're going to discuss in today's paper. Second thing which I noticed and I was personally surprised about is they had this time shifted the pattern. We started with straightforward questions first, and then we moved to MCQ or case study based MCQ questions in this paper. And surprisingly, this time there was no demarcation between direct tax and indirect tax. One single paper, both direct tax and indirect tax, and they expected you to solve all the MCQs in a single OMR sheet. Generally does not happen. my practice, what I've read from people in the past is that they give you 2 OMR sheets for each paper. Okay, so this was a separate deviation from this. So that was something which I was a little taken back for. But anyway, I think regardless of it, if you know the question, you know the question. That's what the idea is, right? Last thing which I wanted to clarify to you people is that I know MCQs come in sets. So there may be 1 or 2 questions which will not be the same as what your set was. This is predominantly what most of the questions look like. Yes, sets are generally those kind of scenarios where most of the questions will match, case studies and all those simple questions will match. There will be 1 or 2 straightforward questions, direct questions which is there. That will be changed between both the sets and all. So if at all you had a different set which is not matching with this question, don't feel bad about it. Most of the questions will match. So figure out that part alone. I only have 1 set, people. I'm sorry. Yeah. Keeping that in mind, let's start this question quickly. What we're going to do is we're going to quickly start with question number 1. Let's read question number 1 and then I tell you what the answers are. Okay. Starting with the first thing, it says Mr. X is a foreign citizen. The moment you see foreign citizen, you're looking at something called as residential status chapter. So we're going back to residential status. I told you rather than reading the whole logic, let's read the chart. Let's read the chart. Now you are a foreign citizen, which means you need to first check whether you have satisfied the 182 conditions or not. Let's read further. It says, since 1999, he comes to India every year in the month of April and has stayed in India for 105 days, which means 182 days not satisfied. You don't go to the right side of the chart, you come to the left side of the chart. In the left side of the chart, you have 3 people, Indian citizens in a crew member, Indian citizens outside India coming to India. None of those are applicable. This is a foreign citizen scenario, which means you need to look for the second condition. Second condition being 60 in the current year and 365 in the last 4 years. Let's look at what happens. It says his residential status for the assessment year 23-24 is to be given. For which they are coming and saying that he, since 1999, has come to India every year in the month of April and has stayed for 105 days. Which means current year he has not stayed for 182 days, but every year he stays for 105 days. Which means current year he stayed for more than 60 days, satisfied. Last 4 years he stayed more for 365 days, satisfied. Therefore, he is a resident, which means you automatically come to the right side of the chart. In the right side of the chart, you have now to check whether he is an ROR or RNOR. He's an ROR or RNOR. Question comes and says, if you want to check whether he's an RNOR, you need to satisfy any of the 2 conditions. Should have stayed in India for less than 730 days. In this case, it will not be less than 730 days because 105 into 7 will automatically go more than 730. So that condition not satisfied. Second, they're coming and saying you should be a non-resident in 9 out of 10 years. I mean, if he's going to be a resident in current year, he's obviously going to be a resident in last year and last year and last year and every single year for that matter, right? So therefore, both the conditions are not being satisfied. Your answer becomes ROR. We are looking at option number B as the answer. Yes, a simple, straightforward question as long as you know the chart clearly. Question number 1, 2 marks in your hand. Let's move forward. Next, compute the deduction under section 80D of the Income Tax Act to Mr. Dinkar, assuming that he does not opt for 115 BSc. He is not opting for 115 BSc, which means it is going in a Finance Act regimes. You are eligible for 80D. What the provisions come and say, you have been given a premium paid for insurance of the health of a spouse who is 43 years old. He's not taken any insurance for self, he's taken it for the spouse. I don't know what his age is. Spouse age is given as 43, which means I'm assuming this person is also less than 60 years, which means you are fully eligible for this because the limit is 25,000. Next, I'm saying premium paid for insurance on the health of the father who's 67 years. Now, father has been given a 67. No information given. Assume father is resident senior citizen, which means father is eligible for 50,000. Paid is only 25. Therefore, you're eligible for full 25. Next, medical expenses paid by Dinkar using credit card for the treatment of father who is a resident. Now, here they have clarified that the father is a resident. No problem. But notice they say that he has incurred medical expenses for the father. Now, father already has an insurance. Can he take a medical expense benefit? Absolutely not. Provisions come and say if you're a resident senior citizen, you can have a claim of medical expenses only if you don't have an insurance. Therefore, 30,000 is not allowed as a deduction. Rahul, can we take beneficial highest of the both? Let's take 30,000 and not 25. No. If you have an insurance is the answer. If you don't have an insurance, is when medical expenses come. It is not whichever is higher also. Okay. So 30,000 not eligible. Next, he also has a mother who is 63 years old, resident 15,000. Eligible? Yes, because mother is eligible. So 15,000 for mother is also eligible. 15,000 for mother is also eligible. Preventive health checkup has been taken of 5,000 for spouse and father. For both spouse and father is taken 5,000. Together both the buckets you are eligible for 5,000. Therefore no problem. Let's put it out clearly now. We have spouse, we have parents. For spouse he has paid 15,400. Parents, he has paid 25 plus 15, therefore 40,000. Are you still having enough limits, Rahul? Yes, you have enough limits. So which means either you put 5,000 here, it doesn't matter, or you put 5,000 here, it doesn't matter. So I am assuming it is for spouse. I'm using it is for spouse. Number becomes 20,400 and then 40,000. Answer becomes 60,400. Answer becomes 16,400. Therefore, option number C is right. Option number C is right. Unfortunately, the person who shared me the paper has not done it right. He has put option number A. I don't see how the answer will come out as that way. Anyway, forget all that. Answer is option number C. Answer is option number C. Yes, the only challenge in this question was to remember that 30,000 is not eligible as a deduction. Keep this alone in mind. Keep this alone in mind. Polama? Yes. Oh, no, wait. No, wait. I'm sorry. It is not 60,400. This is what I was careful about. Yes, notice it says preventive health checkup is 5,000 each for spouse and father. 5,000 each for spouse and father. I think this is why the person put it as 75,400. Answer is no. Answer is no. Please understand. Each spouse and father also doesn't matter. Both groups will get 5,000. Both the groups will get 5,000, which means answer still remains at 60,400. I think this is what he made a mistake. He might have assumed 5,000 eligible for both the people, and he would have assumed 30,000 as the deduction claim. Answer is no. You can only get 60,400 because 5,000, both the buckets together only you can claim. So either one will claim, either spouse will claim or parents will claim. Put it either ways, it doesn't matter. 60,400 is what the answer will come out. Yes, Polama. Next. Question number 3. It says the total income of LM and HUF, which means slab rate model, yes, comprises of an LTCG of 112 of Income Tax Act 35 lakhs and interest on fixed deposit of 2 crore 10 lakhs. Now this is where the challenge happens. Look at your total income now. Your total income is IFOS of 2.10 crores and LTCG of 0.35 crores. Total income becomes 2.45 crores. 2.45 crores. Now, because this was an amendment in the current year, they gave an amendment question to you. Notice very carefully, your total income has gone beyond 2 crores, which means normally you're liable for a surcharge slab of 25%. But current year amendment was LTCG under section 112 is now only liable for 15%. Is only liable for 15%. So LTCG will be liable for a 15% surcharge, and IFOS will be liable for a very good 25% surcharge because it is more than 2 crores individually also. It is more than 2 crores individually also. Question says calculate the amount of surcharge. Calculate the amount of surcharge. Now this is where they love to play with you, you know. They say, I want the amount of surcharge alone. I don't want what is the tax. I don't want what is the surcharge. I don't want what is the total cess. I don't want what is the total liability also. I want the amount of surcharge. I want the amount of surcharge, which means you need to compute the tax, then find out the surcharge and total the surcharge. Now, because it is IFOS, this is liable for slab rate model. Now the question says he is not opting for 115 BAC, which means you have to do the 2.5 lakh slab because this is an HUF. LTCG is 20% tax. Yes, for the sake of benefit, I have put it on the right side. What is going to happen? Your LTCG will be taxable at 35. LTCG of 35 lakhs will be taxable at 20%, having a 7 lakhs of basic taxes. Surcharge will be at the rate of 15%. Surcharge will be at the rate of 15%. So surcharge on the rate of 15%. Now 15% is on the basic tax, therefore it comes as 1,05,000. Then you have 2,10,000 at slab model. You will do the 2.5 lakh on a slab. You will get 61,12,500. On this, you will add a surcharge of 25%. Number will come as 15,28,125. Now, question is asking for only total of surcharge, which means total these two. Number will come as 16,33,125, which means option number D. Polama. Next. The tax liability ignoring section 115 BAC, again normal regime. For the assessment day 23-24 of a resident individual, Mr. Manav, is aged 40 years and has earned an LTCG, no other income. He has an LTCG, normal resident person, ages 40 years, has earned an income of 4,50,000 from the sale of plot of land. Which means if you are going to sell a plot of land, it is 112 at the rate of 20%. They are saying during the previous year 22-23, he has also claimed a deduction of ATC of 1 lakh and ATG of 50,000. Now, if you know your chapter properly, chapter 6A can only be claimed on slab rate incomes. can only be claimed on slab rate incomes. LTCG is not eligible for any kind of deductions, which means both the information are ignored. Both the information are ignored. You will ignore both the information. Your total income will remain 4,50,000. Your total income will remain 4,50,000. Now, because your total income is 4,50,000, deductions become zero. Your total income comes to 4,50,000. The one mistake which I'm assuming most of you would have made. Many people make this mistake. They forget to exhaust the basic exemption limit. In my classes, I've already told the gulab jamun and the kaju katli example. When you have guests coming, the Finance Act coming in, if the Finance Act is not exhausting the basic exemption limit, capital gains are allowed to use it. As long as you are a resident individual, which means out of the 4,50,000, 2,50,000 will not be taxable because it is going to slab. It is going into the slab. So you will ignore the 2,50,000, leaving you with an additional 2,00,000 pending. This 2,00,000 will be taxable at 20% tax rate, giving you a basic tax of 40,000. Since you are having an income less than 5,00,000, you are a poor citizen. Therefore, you are eligible for rebate. Reduce 12,500 of rebate. You will arrive at 27,500. Include 4% cess. Number should come at 28,600. A very easy question as long as you remember the exhaustion number. As long as you remember to exhaust your basic exemption limit. If you don't exhaust your basic exemption limit, 41,600 will be the answer. But 41,600 is not the answer. Yes, I say I will play with you. Both the answers are given to you. You need to know which one to answer. I would feel this is an easy question if you know the logics properly, but if not, this might be a miss out area for you. Okay, next. Mr. Kuldeep is working in a scheduled bank since past few years. Mr. Bank has allotted 2,000 sweat equity shares to him in May 2022 at the rate of 1,300 per share. So this guy has got some sweat equity shares from a company. No problem. The fair market value on the date of share is given as 1,500 on the date of exercise of the option by Mr. Kuldeep. So what is there coming and saying is the company has given employee some sweat equity shares at a price of 1,300, whereas the market is 1,500. For those who would have realized it by now, this is a salary chapter. In salaries, if you are going to give any ESOPs to your employees, the difference between the fair market value and the actual consideration will become salary income. Which means 1,500 minus 1,300 will become 1,500 minus 1,300 will become 200 rupees. So 200 per share. 100 per share into how many shares did this guy got? He got 2,000. Which means it will become 4 lakh rupees. Now at this very stage itself, I can stop seeing the question and I can put it as option A. Because no one else has the same answer. But just for the sake of convenience, let's go forward and see whether the balance is right or not. Yes, it says he has sold the 1,500 shares at 2,100 per share on 31st March 2023 on a recognized stock exchange, assuming that securities transaction tax has also been paid. Now, notice he has bought the share when he got the share on May 2022. He sold the share in March 2023, which means within a period of 12 months. Which means the asset will become a short-term capital gains. Now, for the purpose of short-term capital gains, you will have to consider the cost of acquisition as the fair market value because you've already taxed the extra 200 as salary income. Since you're going to tax the 200 per share as a salary income, that will be added to the cost of acquisition of the asset, which means the new cost of acquisition of the asset will become 1,500. 1,500 shares he has sold at the 1,500 cost. He has sold it for 2,100, which means he has made a profit of 600. He has made a profit of 600 per share. Into how many shares did he sell? He sold only 1,500 shares out of 2,000 shares. Therefore, this should become 9 lakh rupees. 9 lakh rupees will become your short-term capital gain. Answer is option number A. Simple, straightforward question. I am expecting everyone got a full mark in this. Next. From the following transactions, you are required to compute the total income of capital nature and revenue nature items. So they have told you that there are some transactions. Tell me which one is capital. Tell me which one is revenue. Let's look at the items one by one. It says purchase of furniture with no intention to resale but sold under changed circumstances. I have bought an asset. I don't want to sell it, but I had to sell it for unforeseen circumstances, which means the asset was not bought with an intention to sell. This is a capital nature item. Next. Respect of liquidated damages directly and intimately linked with the procurement of capital assets, which leads to delay in coming to existence of the profit-making apparatus amounting to 2,50,000. We would have read this in the basics of income tax. In basics of income tax, whenever you have any capital asset and you're getting any liquidated damages against it, this is something like subsidies to you. While it is not from government, but it's still a subsidy. This will be called as a capital receipt. Next, receipt of compensation of termination of agency business being the only source of income. If this is your bread and butter, obviously this will become capital receipt. become capital receipt. Then compensation received from employer for premature termination of service contract. Hey, your only employment, that also gone, which means same as bread and butter. Therefore, it is capital. Therefore, it is capital. Yes. So 4 items are there. All the 4 items are capital. None of is revenue. Look at the item. Option number B will be the answer. Option number B will be the answer. Quite straightforward, simple scenario. Yes. This is your GST part, so I'm going to ignore the GST. Yes. The bigger question, your full-fledged case scenario question. Until now, we have done about 6 questions. Yes. Let's look at what questions you may have gone wrong. I'm assuming. Question number 1, straightforward question. I'm assuming 2 marks pakka. 2 marks pakka. Question number 2, most likely most people should have done right. As long as you wouldn't have made a mistake with the 30,000, you should have got full marks. So therefore 2 more marks in your hand, which means 4. Okay. Question number 3, straightforward question, only surcharge level question. If you know the amendment, you'll definitely get it, which means another 2. So 6 marks already in your hand. 6 marks already in your hand. Next question is where I have a trick. I feel like people might have made a mistake in the adjustment part, so I'm assuming this might have been made a mistake. Assuming if you have got it good, great, expect a rank only, definitely expect a rank. Otherwise, assuming this would have been wrong, so another 2 marks gone for you. So right now 6 out of 8. 6 out of 8. Next, this 100% is an easy question, people. I'm expecting 2 marks out of you, therefore another 8 out of 10. 8 out of 10. And this one is again a straightforward question, so therefore it is another 2 marks, so therefore 10 out of 12. 12 marks in the 10 marks easily come in your hands, leaving you with a balance case study question. Let's look at the case study question. Yes, I might have told you in the class, in case I have not told you, notice never start with reading the case study first. Always first identify the question, golden rule number 1. So let's forget this and identify the question. Question number 1, they come and say, what would be the gross total income? So they want the total income of the person. Next, what would be the income and loss under the head house property for the person? What would be the net annual value of the property? Which means 2 questions are relating to your HP. If you get your HP right, 2 questions are solved. Next, you have to do one full gross total income level question. So this is what they have asked you. Now, this question was a little tricky, not because of anything, but because they had given some information which is pending. Okay, they have not even given some information, they are not clarification on those information. So that is why this question is a little tricky, but I will tell you what those analysis is. Now let's read the question. And see which part of those questions are relevant for us and which part of those questions are not relevant for us. Okay, let's go for it. It says, Mr. Atul owns a house in Delhi having 3 independent units. One house, 3 independent units. Unit 1 is having a ground floor with 50% area, which means this is a IFHP scenario. Probably. Then it says first floor is having 25% area, third floor is having, second floor is having 25% area. Okay. Now they're saying unit 1 is let out for residential purpose, which means first unit is LOP. This will come under IFHP. Great. I need this information for my question number 15 and 16. Second, they're coming and saying, unit 1 has been let out for residential purposes to Ankush on a monthly rent of 20,000 rupees. So 20,000 rupees is your rent for the property. Hold. This is your actual rent. However, the same remained vacant in the month of March 23 and could not be used, which means 1 month vacancy loss. Next, further in the month of November 2022, Mr. Ankush the tenant, visited Chennai for 21 days for some work and he could not reside in unit 1 for 21 days. He could not reside in the house for 21 days. So this guy who was living in the property in Delhi had gone to Chennai and therefore could not use the house for 21 days. A normal question as a human being. You are the tenant of the house. You go to Thailand, you go to Madurai, you go to Chennai, you go to hell, it doesn't matter. Will you stop paying rent for the house? Obviously no. Just because you have not been there in the house, it does not work on a daily basis. You will be paying rent for the house. Therefore, here I would like to make an assumption saying you have paid for the house. Yes, they are saying for 21 days he could not live in the house and therefore he could not reside in the house for 21 days. However, possession of the unit 1 for 21 days remained with Ankush, which means if the possession is there with you, then you are technically the owner. You travel, don't travel, I don't care. Which means this is still a received amount. So which means for this 21 days, you would have received the rent, no problem. Which means right now you have 20,000 per month of rent in which 1 month rent is not received. Vacancy loss. Hold the discussion. Next. Unit 2 is occupied by Mr. Atul for his residence throughout the year, which means second property now becomes SOP. Second property has now become SOP property. Third unit is used by Mr. Atul for his profession. Profession ki use panna automatically this goes to PGBP. It goes to PGBP, which means first two will come under IFHP. The third item will come under PGBP. Third item will come under PGBP. Keep this in mind. We'll note it. Then they're coming and saying the other particulars are given to you. You now need to split every particular into 75 and 25. 75 for HP and 25 for PGBP. In that 75 also, 25 will not be considered because it is for SOP properties. So let's see which ones are important. Coming to municipal value, I will only need it 50% of it because I need it for my LOP property. Fair rent, again, only 50% is required because I need it for my LOP property. Standard rent, 50% required because I need it for my LOP property. Ground rent, I do not need it for my IFHP because in IFHP you are not permitted to claim this reduction. The only place you can claim this reduction is PGBP. Therefore, I will need it for my 25% of my PGBP. I need it for my 25% of my PGBP. Ignore 75, doesn't matter. Next, municipal taxes paid during the year. Now, if you're going to pay municipal taxes, you're going to pay it for the whole house, which means 50% of that can be claimed because it is for LOP property. 50% can be claimed because it is for LOP property. 25% of SOP can you claim? No, you cannot claim it for SOP property, which means you can claim it for PGBP. In PGBP also they come and say, section 30 comes and says you can claim reduction of the taxes which you pay subject to 43B. Question says you have paid it during the year, which means it is satisfying 43B. No problem, you can proceed forward. Next, maintenance expenses. Can you claim under HP? No. So 50 also gone, 25 also gone. 50 also gone, 25 also gone. You will be able to claim the 25 of PGBP. You will be able to claim the 25% of PGBP. Interest on capital borrowed. You are borrowing capital, interest you have paid on it. Can you claim? You can claim under all the three. So 50 also claimable, 25 also claimable, 25 also claimable. All the three permitted. Next, annual amount paid to mother of Mr. Atul as per the orders of Honorable Court. Here is where there is a challenge. It says that you have made some annual payment to your mother because the court has asked you for it. Ideally speaking, this is called as diversion of income. And because there is a diversion of income, you should reduce this from your question. But when I was analyzing the question, I realized this was not done. This information has been ignored by ICA. Because for some reason, I'm not sure what is the reason. Ideally speaking, if you ask me honestly, this should have been reduced from your IFHP income. Because this is a diversion of income happening, and diversion of incomes are not taxable in your hands. Understand, it is not an application of income. Because you have not applied it based on your decision. If it is an order of court, you have to mandatorily follow it, which means you never had control over the 20,000. This was a diversion of income. You should have reduced it from your computation mechanism. But from the answers, what I noticed, I could not find an answer relating to it. So I'm going to ignore it. Next, insurance premium paid for protection of property. Can you claim insurance in IFHP? No. Which means can you claim it in PGBP? 100% yes. Next, depreciation calculated for the total house. Depreciation and all IFHP does not have. So 50 also gone, 25 also gone, but you can claim it for the PGBP part. Now, what you have done is you have analyzed and found out how much will go to LOP, how much will go to SOP, how much will go to PGBP. Yes, here is where I was telling you very clearly in classes also. Your classification of head of income becomes most important. If you have classified something in house property, automatically you are only eligible for 30%, and all these ground rent and all those things are not eligible. If you classify something as PGBP, none of these notional items are eligible. You have to claim the actual expenses like those ground rent and all those insurance premiums. Classification is the only reason why you would have made a mistake in this question. Beyond that, a very straightforward, simple question. Yes. Keeping this in mind, let's read the balance part of the question. It says the gross total income of Mr. Atul from profession is 7,95,000. So they've given you gross total income of Atul from profession, which means PGBP income they've given to you. Not relevant for 15 and 16, relevant for 14. No expenditure on notional house rent or any other expenses relating to the house has been deducted by Atul while computing the income from profession. So they're saying this is the income before claiming the above items. That's what the question is. That is all the question is. Let's start from HP first, because question number 2 and 3 ask you for HP. Now notice 5 is asking you for loss from HP. For you to do 5, you need to know 6. So let's first do 6. What will happen? You will say municipal value or fair rent, whichever is higher, versus standard rent, whichever is lower. Therefore, number will become 4 lakh. Now 4 lakh you need fully? No, you need only 50% of it. Therefore, it is 2 lakhs. So your number becomes 2 lakhs of expected rent. In that expected rent of 2 lakhs, your actual rent, ignoring vacancy loss, actual rent, ignoring vacancy loss is going to be 2,40,000. Why are we ignoring vacancy loss now? Because we have to check whether you are a genuine citizen or not a genuine citizen. So your actual rent has come as 2,40,000. Because your actual rent has come as 2,40,000, whichever is higher will become 2,40,000. But because you are a genuine citizen, you are permitted to claim your vacancy loss. You are permitted to claim your vacancy loss. So the 1 month vacancy loss which you have for the month of March, 1 month vacancy loss which you have for the month of March can be reduced, and therefore your GAV will become 2,20,000. GAV will become 2,20,000. Keep this in mind. Keep this in mind. This is important. This is important. Polama. Yes. Next, since you need your NAV and not GAV, I'm looking at GAV being 2,20,000 minus municipal taxes. Question said municipal taxes are given as 90,000. I need 50% of it. Therefore, 45,000 will become my municipal taxes, leaving me with an NAV of 1,75,000. At this point of time, I can stop. This is my answer for question number 16. Option number B. Option number B. Clear? Yes. Next. Since they want the income from house property also, I'm now starting to reduce my 30% of NAV. So therefore, it becomes 52,500, leaving me with 1,22,500. In this, I have to reduce my interest. Question says the interest is how much? It says 2 lakhs. I need 50% for my LOP property. So I'm reducing 50% for my LOP property. Therefore, interest reduced from LOP will become 1 lakh. Therefore, HP income from LOP is 22,500. 22,500. Question is not asking from LOP, they're asking from both the properties. They're asking from old property. Therefore, the SOP portion or the interest can be claimed as a deduction. SOP portion or the interest can be claimed as deduction. SOP portion is how much? 50,000. 50,000 can be claimed as deduction. Now, here is where the second challenge is. In the question, nowhere have they come and asked and clarified to me whether the person is opting for normal regime or 115 BSc regime. Is he opting for normal regime or 115 BSc regime? Here is where I have a challenge. Here is where your MCQs will help you decide. Your MCQs will help you decide what is the right answer. Let's do both. Assuming you were opting for 115 BSc, will you get 50,000? No. Which means your income would have become 22,500. Check question number 15. See if there is any 22,500. No, there is no 22,500. Which means maybe the person is opting for normal regime. Let's look at the normal regime now. If you have claimed for normal regime, 50,000 will become your loss, which means your loss will now become 27,500. Let's check this. 27,500 is there as an answer, which means option number A is right. In simple words, silently they have clarified it to you that the person is opting for normal regime. There was no other reason for them to give question number 15. The question number 15 was explicitly given to you so that you are known that you are doing 115 PAC. If you would have made a mistake to start from question number 14, you would have never been able to find this out. Okay. Therefore, it is always good to read the questions first and then go back to the MCQ case study. If you had read the question first, you would have started from 16, then gone to 15, then gone to 14, Anyway, right now this is clarified to me that this is a normal regime. So therefore, I'm going to go for normal regime. IFHP is done for me. I have answered question number 15 also, leaving me with question number 14. What is the gross total income? Let's do the PGBP part. In PGBP, they're coming and saying that Rahul, my total income before claiming the deductions was 7,95,000. So I put my net profit as 7,95,000. Now I'm going to reduce all those expenses which I classified for 25. Therefore, I classified 18, 90, 32, then 2 lakhs, 15,000 and 1 lakh. I'm going to put all those items. Total of all those items have come to 4,55,000. 25% of that becomes 1,13,750. Leaving me with a PGBP income of 6,81,250. My PGBP income has now become 6,85,250. This being my PGBP income of 6,81,250. Question is not asking me for PGBP income. Question is asking me for gross total income. Question to you, can you set off your HP loss against your PGBP head? Definitely yes. So therefore do a set off. Your number becomes 6,53,750, leaving you with the answer of A. Option number A is the right answer. This completes your case study question also. If you notice, case study question was 6 marks and I did not spend enough too much time also. I did not spend too much time also. A simple, straightforward case study, as long as you have followed your golden rules properly to identify the question first and then classify the heads properly. Had you done these two things properly, you will definitely get full marks. You'll definitely get full marks. Now, here is where I was telling you, the fact that 20,000 should be reduced for the annual rent. The fact that 20,000 should be reduced for the payment happened to mother. Yes, assuming 20,000 is reduced. Assuming 20,000 is reduced, 6,53,000 would have become 6,33,000. Yes, 6,53,000 would have become 6,33,000. Unfortunately, if I look at any questions, I don't see a number lower than 6,53,000 except for 1,75,000. Now, 1,75,000 definitely is not happening. That's a very low number. Yes, so which means this indirectly now comes and clarifies to you that the 20,000 has to be ignored. This indirectly comes and clarifies to you that the 20,000 has to be ignored. This is how you will ignore the other items. Yes. So the case study question, the only thing which was challenging is two things: to know whether it is which regime and to know what to do with the 20,000. Even though you don't know the answer, doing a working scenario, you will find out that the options are not having that answer, and therefore what you would have done would 100% be right. Would 100% be right. This is what would have happened for your analysis. Yes. And this marks the end of your MCQs. This marks the end of your MCQs. Again, since we have already covered 10 marks out of 12 marks there, this is another 6 marks. This is another 6 marks. I'm assuming at any point of time, people at least for the very least would have not gone wrong with net annual value. So which means net annual value is definitely coming out right. 2 more marks for you. That will become 12 marks. And then another 2 marks for the loss. Another 2 marks for a loss. Again, HP loss, most likely you wouldn't have made a mistake. You wouldn't have made a mistake, which means another 2 marks. Another 2 marks. You are expecting 14. You are expecting 14. 14th question, if you have done it right, great. If you have not done it right, no problem. No problem. In simple words, Rahul, with just these MCQs, in a matter of 36 minutes, which I complete this lecture right now, in a matter of 36 minutes, obviously with the promotion and the introduction which I gave in the first, ignoring all those things, in a matter of 25 minutes, I have completed 18 marks of our MCQs. And 25 minutes is what I told you also, if I remember properly. 1.5 minutes per mark. 1.5 minutes per mark. You have completed this within a span of 25 minutes with me explaining so many things. For you, you don't even have to read through all the explanations. In exam, you definitely should have done it faster also. Yes, which means MCQs this time were fairly easier for you to answer had you not spent the time into analyzing or interpreting things. If you have done those, you might have lost some time. Beyond that, I don't expect this paper to be lengthy. It was a very easy MCQ level answer where yes, out of 18, you could have at least scored 14 marks. Bare minimum, you would have scored 14 marks. Balance 4 marks, no problem, people. It's okay to let go. It's okay to let go. IDT also would have saved you somewhere is what I feel. IDT MCQs were also easy is what I heard. Final paper was different story. The descriptive paper was a different ball game altogether. We will discuss when we do the analysis of that. Okay. Anyway, in the interest of time, I'm going to cut the video right now. We are going to come back soon. Maybe in another 1 or 2 days, I will upload the descriptive lectures or descriptive analysis paper also, so that you can see what the answers were in this. At this point of time, let me clarify, whether you are in November 23 or you are planning for May 24, answers will remain the same because there is no change between both the attempts for these questions. For these questions, there is no change between both the attempts. So even if you are in May 24, feel free to solve this paper with the markings which I have given to you. You should be able to get the same answers for your attempt as well. Descriptive part, I will let you know whenever there is a change between May 24 and November 23. We will do that paper in another 1 or 2 days. Stay tuned to the videos. Thank you, people. Have a great day. Enjoy your holidays. Well deserved for you. Take care.